There's something to be said around like price manipulation, tax manipulation, that sort of thing, right? Which is a criminal offense. So, I mean, to start off with, just be careful, because when you start asking questions on how can I pay less tax, you sit on the fence between, am I just like evading the payment of tax, or am I just structuring things in a very particular way in order to allow me to pay less tax? The latter is permissible. SARS has even acknowledged that it's permissible. If you structure your tax affairs in a proper way and it's real, it's not fabricated, SARS accepts it. And SARS kind of anticipates that people think like that. So SARS is hard on their approach to us. And for savvy investors, especially property investors, that's why I keep saying it's crucial that you guys actually go and structure it, because the expectation is that you have. So don't go pay more tax than you have to, when there's actually simple things out there that can give you proper structuring, proper tax efficiency, and it's perfectly legit. So just think about it from that perspective. Now, when it comes to a transfer duty, so just to catch up what we've already discussed on transfer duty. Transfer duty is a tax payable on the transfer of properties. It's you never pay transfer duty and VAT. So if you're selling a property and you're a VAT vendor and the property is part of the enterprise that your business, and you're selling it, you have to charge VAT on that property, right? So if you charge VAT, you don't charge transfer duty, or rather transfer duty isn't charged, or vice versa. So they're mutually exclusive. So that's the first thing to remember. If VAT isn't applicable and you're buying a property, you pay transfer duty. Basically, you don't pay transfer duty on anything less than R1 million. Anything over R1 million, SARS has basically a scale. So the more the property is, the more tax you pay on it, percentage-wise. So it's there's almost a wealth element to this as well. So it gets more expensive the more value the property is. Cheaper the more affordable the property is. So the R1 million tax threshold is normally where people start asking the first bunch of questions. Is if you're playing around that threshold, is there anything you can do? So remember, SARS wants the market value of the property. They'll assess the transaction based on the market value of the property. If you go to them and you're able to substantiate a value that's under R1 million, and you've got enough proof, or you've done your research, there's nothing wrong with it, right? Especially if you're along those lines where the property could be valued here or here, and there's multiple different opinions on the valuation. It's very easy to justify a valuation without lying. As soon as you start trying to drop the price almost intentionally from 1.5 to 800,000, and you just thumb suck that amount, and then on the back end of things, you've got, let's say, somebody paying you in cash, and you're like, so as an example, the agreement of sale is for 999,000 Rand. And then you have, a separate agreement where the guy's going to just give you 200,000 Rand extra without any proper justification. So that's obviously illegal. That doesn't make any sense. However, same thing I said with capital gains, I'm going to say with transfer duty. Some people don't structure the deal properly. So there's structuring your affairs and your structures, and then there's the deal. And some people throw everything, especially when buying commercial properties, but anything, they throw everything into a pool and they go, well, we're buying the property for X amount, not realizing sometimes that there's different things in the property that you might be buying. Some properties have going concerns on them, which is a separate value to the property itself. So don't mix the two up necessarily unless it makes sense. So, I mean, if that's chargeable on the going concern, maybe the property should be excluded and you could zero rate it and not pay anything on it, as an example. Or, something like that. So you need to look at the transaction. You need to make sure that you've ticked the right boxes. Are you buying any movable assets together with the immovable property? Because if you go make an offer and say, well, I'm buying the property for 1.2 million Rand, right? And then the seller goes, oh, yeah, you know what? All the stuff is included. And you're happy now that all these things are included, and you go and pay the 1.2 million Rand for the purchase price on the immovable property. You're kind of missing the boat there, because if 200,000 Rand of that value was actually sitting in movables, furniture, even expensive things, that go on the property that are considered to be movable and not part of the property itself, you could have valued those separately. And you could have gone SARS and said, I don't actually need to pay transfer duty for the property, but I'm buying this, right? And be honest and open about it. And SARS might question it and say, well, is it actually valued? But you're not lying to SARS. You just need to structure it properly to make sure that it makes sense. So that's pretty much the only tips that I have for considering transfer duties. Make sure that when you're paying a purchase price, you're actually calculating it on immovable property, because anything but immovable property, you wouldn't have to pay transfer duty on. And the only other time where transfer duty might not be payable is if you're doing like internal corporate restructurings, which is a bit more complex. But if you're moving a property into a company, for example, in exchange for shares, you wouldn't have to pay transfer duty there. But that's more when I speak about structuring your affairs properly. That's kind of what we do to move some stuff around without you having immediate tax liabilities. That doesn't mean the tax liability won't be there, just won't be there today. It'll be there tomorrow, or eventually when you sell the property.